Hi there, folks. John Broderick. I'm here at the 49 North Investment Conference. It's in San Francisco, and I'm here speaking to Stephan Axell. He's the Director of Corporate Affairs for Franco-Nevada. Now, if you've been one of my subscribers, you know Franco-Nevada. We've made money on it before. They're a great company, one of the best streaming and royalty companies around. And Mr. Axell is here to explain why he thinks that rather than buying a gold ETF, you should consider buying Franco-Nevada instead. Mr. Axell, could you speak to my subscribers?
Yes, certainly. Thank you very much for the opportunity. As highlighted, Franco-Nevada has been relatively successful. We now are the fourth or fifth largest gold company in the world. That said, the gold ETF, mostly represented by the GLD, is the single largest and most liquid gold investment in the world, but we think that we offer a very compelling alternative to that. With the GLD, the gold ETF, essentially all you're looking for is price participation in the gold price. You will never get anything more. And for that right, you have to pay basically 40 basis points, and all you are seeing is price participation. With Franco-Nevada, we do offer you growth in the form of the ounces that are attributable to you. We've done a calculation that says that we are essentially trading at a 40 to 50% discount to the gold price today of the measurable ounces that we see in our from our top 60 assets. And this doesn't assume that anything else is found on our property or anything else, or that we acquire anything else with the amount of cash flow that we're generating currently. For this right, the ounces are still in the ground, so they do have to be mined, but these are cost-free ounces. We have an oil and gas division that does pay our taxes and pays our overhead, but we will pay you basically a 1.5% dividend yield versus the GLD that all you're ever going to get is the price participation and paying for that right.
Okay, so Franco-Nevada has 11 million cost-free ounces.
Correct.
Right?
Yeah. So that's basically, at call it $1,200 gold or $1,100 gold. That's roughly $12 billion in value. We are a $7.5 billion market cap today. We do have about $1 billion in cash around there, so $6.5 million enterprise value, and that's why I say that we are trading at a roughly 50% discount to the gold price.
And Franco-Nevada is one of the best streaming and royalty companies around. And with the way that the market has changed, I mean, the big companies that used to do the financing in this industry, they're gone. Now the miners have to come to companies like Franco-Nevada to get financing for these projects, isn't that right?
Yeah, I mean, the project lenders, the big banks, you'll have a very difficult time to finance any of your properties through mine financings as well. The equity market it's more difficult for these companies to issue equity at these times. So I think that Franco-Nevada will offer attractive financing alternatives for these companies in the form of when you compare it to the project lending, many of these you can't get $500 million from a bank anymore, and if you did, then you have to go to a syndicate of 10 banks because they will only put up $50 million. For Franco-Nevada and many of our competitors, such as Royal Gold and Silver Wheaton, we are able to write large tickets to help advance these projects to construction.
Because the point that I was going to make is that it's 11 million ounces now, but you keep adding the best streams that you possibly can.
Correct.
So it's probably going to be more in the future. And a point you made to me when we were speaking earlier is you guys always make sure that you're going to get your money back. You're actually very conservative that way.
Yeah. Year to date, we've deployed roughly $900 million on new assets, but the most important aspect of ours is that we check to, when we invest in any new assets, our board of directors will say, will we get our money back? So we have to put our hands to our heart and say, yes, based on all our due diligence and studies, we believe that based on the studies today that we will get our money back. And then, after that, then we look at, the geological potential, if there's, if it's a large property position, if there's been additional drill holes on the property, that's where we get our increased return on those assets.
Okay, cool. Well, that is a really interesting take on the GLD or any other gold ETF, which is, and is something that I have talked about in the past, which is these streaming companies really are the best way to invest in this whole sector because they have much lower risk. They usually are going to get their medal no matter what anyway. And they really spread things around because they have a piece of so many different projects. Thank you very much for speaking to my subscribers. You folks stay tuned. I'll have more for you.
Happy investing.